Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Thursday, October 18, 2012. Well, a change of trend today in this market, and the candle has made a lower high and a lower low. Previous day's trading, we had an uptrend in place on an indecisive spinning top type candle that tested to the 1755 area of resistance, and we saw the strong price rejection on that candle, and the market rallied on indecision, and the spinning top candles are candles of indecision. So in a market that was rallying, we would have preferred to see a bullish candle, but we saw indecisiveness, and that did set the market up for the potential change of trend that we've actually seen today. A fairly large black body candle today, and it does suggest that the sellers have shown that they've got some decent downside momentum in them. A very solid net gain by the sellers between the open and the close, a black body candle, and the sellers have managed to close the market down between the midpoint level and the low, suggesting that they've closed with control. They did lose some commitment, as we see the small shadow on the bottom down around the 1738 level. And today, as this current candle is forming, the candle to the right hand edge here, it is black, and we are seeing some continued bearishness, and there is a strong possibility of the market testing down to around the top of this highlighted yellow area of very strong potential support for this market. Previously, we saw the market test to that level around the 1730 level, and buyers come back in to trade the market up to the 1755 area. So that will be a very strong area of support. We also have strong support down at the bottom of that zone, highlighted in yellow, where we have the top of the cloud, and all the way through down to the 1660 level is very strong support because of that cloud. We also have the round number 1700 within the cloud there, so that will make that area even more strong as an area of support. If we do see the market rally, strong resistance at 1755, that's been an important level as support and resistance previously, and for the day prior to today's trading it held as resistance, so it will be a very important level. In terms of the current Fibonacci extension, we've seen price action rejected from the 38.2% level today. At the moment, the market is testing to the 50%, and let's see how that holds up. If we see buying coming in, that could be a guide to a turn in the market, a change of trend to the upside. So we do need to watch that. And the market has tested just to there today, and there does seem to be some slight rejection from there. But we do need to wait and see how this current candle turns out. If we do see buyers come back in, then there would be strong potential for a change of trend. In terms of the Fibonacci retracement of the prior uptrend, very small time frame uptrends we're discussing here, but for today's trading we've seen the market test below the 50% level, test to the 61.8% level, and was rejected from there, with the market closing just at the 50% level, so that could be significant. Today we're now seeing the market test around the 61.8% level, around this one, 1739 area, and some slight rejection, so that will be important. The next level down below there would be the 100% level at 1729.7. But in terms of Ichimoku, we have a bullish market in the long-term time frame by the market trading up above the cloud. So overall, we do have quite a strong market still, but the market is now retracing back towards the cloud, and we are going to find some solid support at that cloud potentially. But the market is still trading down below the Kijun-sen and the Tenkan-sen, and we have been trading below there for a few days now, roughly for about a week or so, and it was quite some time since we saw the market trading down below there, but that's quite significant. We saw the bearish breakout down below the Kijun-sen here, and that was a weak sell signal, because it's trading above the cloud, and then the market attempted to rally from there but found resistance around the 1755 level, and today is now selling off, and that's confirming that we are perhaps seeing some sort of a change in sentiment in this market, and that there is potential for the market to test a lower level. So a bearish market in the medium term and the fast term time frames by trading down below the Kijun-sen and the Tenkan-sen, the pink line and the green line here. Now those areas will act as potential resistance, as I've mentioned, if the market does rally. The Tenkan-sen is trading at the 1755 level, so that will strengthen that, and the Kijun-sen, it looks like, is turning up towards the 1767 level, and will strengthen that area as resistance as well. But for tomorrow's trading, we really do need to watch the low of the current candle down around the 1739 level for a potential continuation of the trend. We don't have any signs that the market will rally at the moment. The strength is still with the sellers at the moment, but very close down below there we do have a very strong barrier of support that extends a fair way down below where the market's trading.